such sector which is in focus on account of fundamentals is also agrochemical space, because there have been a lot of profit warnings or guidance cuts that have emerged from a lot of global players. But what will be the impact back home? And is it just transient, or is it going to be a bit more structural? Let's discuss all of that with Rohan Gupta, the Director of Nuvama Institutional Equities, joining us. Rohan, hi. Thank you so much for making time and speaking with us. Just the first question exactly on that. What's your view right now on the industry, the kind of commentary that we have been hearing from the likes of Clariant, FMC, etc.?
Yeah, hi, good morning. So first of all, yes, this is going to be a very tough quarter for all the global agrochemical companies. The pain will be more sharper for the generic agrochemical players, the names which you're talking about, like even FMC, UPL, and all these guys. The prime reason for this is basically there is a lot of inventory in the system, and we have seen that there is some slight pressure in demand. Also, what happens when the raw material prices, which are falling very sharply right now, the trade is in mode of inventory destocking. So all these companies actually have to take a cut on their high cost inventory. That is going to put pressure on their EBITDA, the profitability, and also there is slight weakness in the demand side right now. That is also putting the volume growth for all these companies. So that's where we see that there is a pressure across the companies in a global market.
Just maybe give us a ballpark as to what exactly would be the impact on profitability. How much do you think there would be a reduction in overall volumes, maybe company specific or just from the sector as a whole?
So yes, on an aggregate basis, we see that there is going to be roughly 10 to 15% kind of revenue decline. Now, this revenue degrowth will be function of two things. One is the price drop, because raw material prices are falling. So we have seen that last year a lot of raw material prices driven by crude has gone up. Now that prices have started falling, so there will be on a net sales basis, there will be price drop. That is one. Second, we also see that in the first half, there is going to be volume challenges. We are expecting the volume to decline by somewhere close to 6% to 10%, depending on the company to come and how much inventories they have in the market. But yes, that is kind of top line degrowth. The impact on profitability and EBITDA will be much sharper. We are expecting on an aggregate basis for our universe, 35% kind of drop in EBITDA. It is primarily coming from UPL because we are looking at EBITDA level quite a lot of decline for the company. Also, as I just mentioned, that a high cost inventory, the liquidation of the same is going to impact the profitability. When your EBITDA is down by roughly 35%, we are expecting that bottom line cut will be much sharper because of the negative operating leverage. And that's where maybe bottom line of players like UPL or our universe may be as much as, down by as much as 50% also.
That is the case, right? If you could spell out more details over here, because, as we understand that UPL as well as the FMC portfolio is pretty much along the similar lines, and therefore this big impact.
You are absolutely right that yes, when the profit warning came from FMC, we are already expecting the similar kind of drop in UPL's numbers as well. So when the FMC gave the guidance cut, it was not a surprise for us because we are already factoring this kind of drop in profitability for players like UPL. As far as the Indian agrochemical companies are concerned, mainly players like Dhanuka, all these guys, rallies and all, their impact will be quite different because Indian markets definitely has started the season on a with late because of the delayed monsoon and initial fear of El Nino have impacted the trade. Trade was not in inventory stocking mode. So there will be some impact on domestic market, but I see that domestic market and domestic agrochemical players may start showing some pickup in revenue growth with the monsoon picking up right now in month of July. Global agrochemical companies, especially FMC, UPL and all, I think that these companies have yet to see some more pain. Maybe Q2 is also likely to be what we are going to see in Q1.
Rohan, so tell me on an aggregate basis, and in particular for UPL as well separately, how much of a price damage are you envisaging right now? Because clearly there would be derating in the stocks. We've already seen the negative impact play out yesterday. Today as well, some of these stocks are pressured. How much more of a derating, and is it a sell for you across the board?
So I think that the impact on stock price is more driven by the earnings downgrade, which this weak earnings may trigger. As far as the valuations are concerned, I think that there is a comfort on valuations because we these companies are not trading at a premium. Actually, UPL will be trading even at a discount to its last 5 year average PE multiple. But yes, there is a concern on earnings downgrade, which I believe that maybe up to the extent of overall earnings downgrade, even if we assume that second half will recover. But as of now, it looks like that there may be earnings downgrade in the range of close to 15% to 20% for most of these guys. That's what I think is already getting reflected in the stock price. There may be some more downside as soon as when we reach closer to the result time, and more companies probably in a generic space may come with a profit warning. I think that the sentiments are going to remain slight negative in a current scenario, and that may lead to further fall in the stock price.
Okay, Rohan, great to have you on the show and help us understand really what this FMC guidance cut would mean for the Indian agrochemical sector as well.